Welcome back to our Chapter 2 video lectures. In this lesson, we are going to cover Learning Objective 3. This is also pretty short. In this case, we are looking at the posting of our journal entries. So it's general journal entries to our GL, our general ledger. So in this case, we are looking at our general journal, and our general journal are our journal entries. And we're seeing all the ones that we recorded in July, for example, our prepaid rent and our cash. And here you see the post reference is the general ledger account numbers. Now remember, any account on your chart of accounts is an account that you can hit, meaning you can post to it. So in this case, we're seeing that we prepaid rent, and we see right here that we have our cash, and we are calling this general journal 1. And so that's our journal entry number. And we're booking them into T accounts because we see the page number right there. Then we also see the reference right here. So now we look at all of our balance sheet accounts, and remember, our balance sheet accounts are permanent accounts. Okay, so that means that they stay always they're cumulative from the inception of the company. And now we see the T accounts for each of them, the account numbers as we see here. And normally in our chart of accounts, we usually follow a similar schematic. So we say that 1 are assets, 2 are liabilities, 3 are equities for our balance sheet accounts, and then we move on for our income statement accounts. 4 are revenues, 5 are usually cost of goods sold, and 6, 7, 8 are for our selling, general, and admin, with 9 being our other expenses. That's normally the journal entry accounts, the journal accounts that we use. So 101 or 100 is cash, and we see that most of our assets are in 1s. Our liabilities, as you can see here, are 2s, and our equity accounts are 3s. That's pretty standard. So once we post them, now we're looking at our income statement accounts, which remember, those are temporary accounts. And here we see the 4s for our sales revenue, 5 for our cost of goods sold, and then we included 5s in the salary expense as well. So once we have a listing of all of our general ledger accounts with their balances, we have an unadjusted trial balance. Now remember, the trial balance lists all of your accounts and their balances, so the debits equal the credits. And that's where you can check if everything is correct. If your debits don't equal your credits, then you might have a one-sided entry or a top-side entry. So you want to make sure that you look at that prior to continuing. So here we have our unadjusted trial balance with our debits equaling our credits. The accounts are usually listed in order by number. Cash is usually first because it always starts with a 1. In our case here, it's a 100. And it lists all accounts, the debits and the credits. And you'll see all of your assets have a debit balance. And then you see your liabilities have a credit balance, and your stockholders' equity or your equity accounts have a credit balance. And here we have a debit balance for retained earnings, which tells us that we lost money. Then we have our revenue, which is a credit, and our expenses, which are also debits. So it's just an easy way to list all of your accounts.